This is Sharon Garvin of Wayne State College, and this is my screencast for Chapter 16 of the Accounting 2 online course. In Chapter 16, you'll be responsible for doing some mathematical types of computations associated with changes that occur in the direct materials inventory. Those are the items or ingredients that are used in the manufacture of products. Changes in work in process inventory, those are the costs associated with items that have been started but are not yet completed. And finished goods inventory, those are the costs associated with items that are 100% done and ready to sell to our customers. In each one of these situations, we start out with the beginning inventory dollar amount. Some items get added to that, and between the items that we have at the beginning of the period in this particular part of the factory and any items that were added, only one of two things can happen. We assume we either still have them in our part of the factory at the end of the period, or they got transferred on to the next step in the manufacturing process. So we'll show you a little bit about how the mathematical computations work. The direct materials are kept in a raw material warehouse, so we have a manager responsible for the raw material warehouse. This manager has a certain dollar amount of materials in the raw material warehouse at the beginning of the period, and then items that are purchased, additional purchases of materials come into this particular building. So the manager is responsible for two things: what was there at the beginning of the period and anything in addition that was purchased. We are saying, because this is accounting 2, only two things could have happened to the items in the raw material warehouse. We either still have them at the end of the period in the raw material warehouse, or they got moved from the raw material warehouse to the production area to be used to manufacture products. Of these two items, the ending inventory is the easier one to come up with. Hopefully, in most manufacturing situations in the United States, we keep low levels of inventory on hand. That's more efficient. We'll learn about that later in the course. So if we can count what's there at the end of the period and put a dollar figure on that, we can easily subtract out the dollar amount assigned to ending materials inventory from what we had at some time during the period in the raw material warehouse, and that'll tell us how much the materials got actually used in the manufacturing process. In our Accounting 2 class, I generally give students 3 of these 4 numbers and ask them to calculate the missing one. Our students use algebra, so if I didn't tell you what, say, material purchases were, they'd take the dollar amount I gave them for beginning materials inventory, they'd add X, like it's an algebra equation, they'd subtract out the dollar amount I gave them for ending materials inventory, and that would equal the dollar amount that I give them for materials used. Then they would use algebra to solve for the missing number X. So you need to be able to do computations similar to that. Work in process talks about the costs associated with the production area of our manufacturing facility. So a manager in charge of production would be responsible for the dollar amount associated with beginning work in process, and then any costs associated that came in during the period, that is additional materials used to finish these products up, any direct labor used to manufacture products during the period, and any overhead that was applied using a predetermined overhead application rate from the beginning of the period. So after we add in the materials, labor, and overhead, this gives us a total dollar amount of cost that the production manager was responsible for related to work in process. In Accounting 2, we say only two things could have happened to these costs. We either still have the items at the end of the period, so we need to assign a dollar amount to any work in process, and anything else that is not assigned to the any work in process must have got shipped off to the finished goods warehouse. We call that cost of goods manufactured. Cost of goods manufactured, again, is the cost of the items that were completed during the period. These items were shipped off from the production facility off to the finished goods warehouse. Again, I would give the students all of the numbers but one and ask them to solve for the missing number. Most of our students would call the missing number X and set up an algebra equation and use that to determine which dollar amount is missing from that equation. Finally, we'll have a manager in charge of the finished goods warehouse. That particular manager is associated with the items that were in the finished goods warehouse at the beginning of the period, is responsible for the dollar amount with those items, is responsible for anything that comes from the production facility in to the finished goods warehouse, and that's called cost of goods manufactured. So we have here between these two items the total amount of finished goods that were available for sale during the period. Now we say one of two things happen to these items. We either still have them in the finished goods warehouse at the end of the period, or the items are gone because we shipped them out to customers, in which case they're no longer a unexpired product cost, finished goods inventory. They become an expired product cost, cost of goods sold. So basically we take what we had at the beginning of the period plus what came in. Of those two items, the smaller one is going to be finished goods. Again, we don't like to keep a lot of inventory on hand in current American manufacturing facilities, so this will be a relatively small amount. We'll count what's there, put a dollar amount associated with that to determine any finished goods. Subtracting that out from the total of these two will tell us how much should show up in the expense account on the income statement, called cost of goods sold. Once again, of these four numbers, I would give you three and leave one out and ask you to be able to calculate the missing one. Most of my accounting students would call the missing number X and set up an algebra equation and solve for X. Chapter 16 also talks about job order costing and process costing. Process costing will be detailed in a handout, a 9-page handout that I will make available to you under resources. I want to just briefly talk about job order costing. Under job order costing, businesses elect to run around with a piece of paper where they write down anytime they use materials on a particular job or anytime they use labor on a particular job. So we're actually accumulating costs per job. The types of businesses that use job order costing are those businesses that make unique products. So each one's a little bit different from the next. So you kind of run around with this piece of paper or have a separate file in your computerized system that whenever materials get used on that particular job, you write it down. So let's take a look at a product, which is a paper airplane, which takes one sheet of paper, one paper clip, and a couple of coats of paint. And let's take a look at the end of the period, and let's assume we have to determine a cost of a white paper airplane that hasn't been painted yet. If the company was using a job order costing system, we would look and see what had been written down on the job so far. So far, because it doesn't have any of its paint yet, it does have a piece of paper. Let's assume that costs a nickel. It does have its paper clip. Let's assume it costs a nickel. But it doesn't have its paint yet. So to date, it has 10 cents invested as far as materials are concerned. It takes 1 minute to fold the paper airplane, and assuming we pay our person $6 an hour just to make the math easy, that would be 10 cents a minute. So we have 10 cents of labor invested in this item. Again, it's not done because it hasn't been painted yet, but it has been folded. So we have invested some labor cost already. The overhead cannot wait till December 31st for us to put into the products. We need to know how much we've got invested now. So the accountant uses estimates and does the best they can. We generate what's called a predetermined overhead application rate at the beginning of the period based on the total annual overhead we expect to incur for the year and some measure of time that we expect our products to be in the factory. And a lot of times we use like labor hours or labor dollars for that. So let's assume the company came up with some estimates of what they thought total overhead was going to be and the total amount of time we were going to have for direct labor in our factory, and divided that out and came up with a predetermined overhead application rate of $12 an hour. If this particular product used 1 minute, $12 an hour for 1 minute is 20 cents, and the company would have roughly 20 cents worth of overhead invested in this product. So to date, looking at this piece of paper called the job order cost sheet, we would have 10 cents of material invested, 10 cents of labor, 20 cents of overhead, for a total cost of 40 cents. All of this has been written down on the piece of paper. Whenever we use materials, we write it down. Whenever we use labor, we write it down. The overhead is applied at the end of the period or the end of the job, whichever comes first. If this is the end of the month and we want to know how much we've got invested in our work in process, because again, this product isn't done, doesn't have its 2 coats of paint yet, we would say 40 cents. So a job order costing sheet can be used to help us determine the dollar amount of any work in process. And we indicated before that you need to know beginning and ending work in process dollar amounts to be able to calculate costs of goods manufactured. If I'm ready to walk out the door and my boss says, you can't leave yet, you need to finish this particular product, the customer wants it as soon as possible, and I don't get to use my 40 cents invested in this partially completed product to report on the financial statements, I need to actually complete this thing, I would stay after and put the 2 coats of paint on my paper airplane. Since it's a job order system, I would write that down. So additional material, 2 coats of paint. I write down what that costs. Let's assume that's a nickel. Let's say it took me a minute to put the 2 coats of paint on it because I have very, very fast drying paint. Haha. Let's assume that's 10 cents for 1 minute at $6 an hour. 10 cents more of labor would be invested in that. And in my overhead, instead of being 1 minute at 20 cents a minute, I actually have 2 minutes that the product spent in the factory times the $12 an hour or 20 cents a minute rate would be 40 cents. So if the product was 100% complete, the accountant would assign it a cost of 75 cents. That is, the total amount of materials written on the job order costing sheet, 15 cents. The total amount of labor written on the job order costing sheet, that's 20 cents. And the total amount of overhead applied. Again, overhead is applied at the end of the period or the end of the job, whichever comes first. So this is a 100% item completed because it now only also has its 2 coats of paint on it. The accountant would assign a cost of 75 cents in an account on the balance sheet called finished goods inventory. Once the item gets sold, we'll take the 75 cents out of finished goods and turn it into cost of goods sold. But this tells you for the earlier computations of this screencast where the amounts of beginning and ending work in process would come from and where the beginning and ending amounts of finished goods would come from. In a job order system, we would simply look at the totals on the job cost sheet to date. This ends my screencast for Chapter 16.